Ladies and gentlemen, welcome back to the Carlos Samaniego podcast, Tax Debt Consultant podcast, and YouTube stream. Today, I have a really special guest. This guest is going to solve some questions for us for a very common question that I get on a regular basis. In fact, I actually got an email this morning. Somebody had emailed me and said, Carlos, I need your help. I'm trying to buy a house, but I have an IRS tax lien. Can you help me? And we actually have a conversation. We're going to, I booked an appointment for him on Monday. And I told him, keeping a lookout for this upcoming podcast that I have, because I want to talk to you about being able to buy a house when you got tax problems. Is it possible? Is it impossible? And my guest that I'm bringing on is Anna Cervantes, a very close friend of mine. Anna's been in business since 1999. She's a mortgage consultant here in Redlands, and she holds a bachelor's degree in communications, graduated from Cal State San Bernardino, and she's a real estate broker. But most importantly, not only is she a real estate broker with her husband, Oscar Cervantes, with Citrus Heights Mortgage and Citrus Heights Real Estate. She's part of the National Association of Hispanic and Real Professionals, Veterans Association of Real Estate Professionals, National Association of Mortgage Professionals, but she is one of the most unique people I have ever met in my entire life. So I'm just going to bring her on. I see her. She just got into the green room, so I'm going to bring her on. Anna, how are you doing?
Thank you, Thank you for the wonderful introduction.
My pleasure, Anna. As I was mentioning it about Anna, Anna is actually a very close friend of ours. In fact, we went and had Korean barbecue yesterday for lunch.
Yes.
With both our spouses. They took us out to lunch for my wife's birthday, and I didn't get a chance to say thank you.
You're very welcome. Anytime.
Anna, before we start jumping into this technical subject of tax problems and buying a house and getting a mortgage, I want you to tell me a little bit about yourself, because you have one of the most unique backgrounds I had ever known, because you speak multiple languages.
Yes.
And you're going to be shocked of the languages that she does speak. So kind of give me, a bio of who you are.
Okay, well, I'm originally from Nicaragua, right? And my parents were diplomats, so I got the chance to travel to many places. We lived everywhere pretty much. And so I do speak, obviously, Spanish. That's my first language, English and Russian, and Hungarian, a little bit of Hungarian, although my Hungarian is definitely rusty nowadays. But so we got to travel quite a lot. And, when I decided, after I graduated from college here at Cal State San Bernardino, I'm like, well, what do I want to do? And at the time, my husband was in real estate, and I saw the need that he had to have a reliable loan person that he can count on. And I'm like, well, let me get into that business as well. So yeah, since 1999, I've been in it. So I've been through the highs and lows of the mortgage industry. And so I appreciate that you brought me into this podcast today, because yes, I was talking to somebody about especially this particular topic the other day. And I always say, it's only when you need to handle this that we remember, oh, okay. and it always is going to influence your mortgage and your house purchase. But we're going to detail, right?
I know. And it's funny you mentioned that, because nobody really obviously I deal with tax problems on a daily basis. And, and it's funny because I actually coach a lot of people in the tax industry, how to help people with tax problems. And the common thing that they don't understand is that, all these people have tax problems, but sometimes I don't get a call until it's an emergency. And I
Mm.
said, you know what? It's procrastination, right? None of us really do nothing until it
Yeah.
becomes an emergency, whether it be in our finances,
Yes.
whether it's an IRS, taking money out of your bank account, or the state taking money out of your
Oh
bank
my
account,
gosh. Yes.
or even in health. We don't do nothing until you have chest pains, or you end up having a heart attack and stroke, and then you realize, oh, maybe I should have been taking care of this a long time ago. Because one thing, my very good friend and business partner, my mentor, um, um, Larry Winget, says is that these problems only get worse over time. And that small little problem becomes a monster of a problem. And a lot of times what ends up happening, they end up meeting their loved ones, and then now they want to go buy a house, or
Mm.
they're trying to do something. And then all of a sudden they're like, well, wait a second, you got this problem that's going to prevent you from buying a house.
Yes.
And that's why when we were having lunch yesterday, I'm like, you know what, I got to get you on here and let's just talk about, you know, you know,
Yeah.
is it possible? And I guess my question to you,
Uh-huh.
is it possible to buy a house or get a mortgage if you got a tax problem?
Yes and no. And mortgages, I always say it depends, because the short answer will be, well, how extensive is that problem? For example, if your tax issue is a tax lien,
Mhm.
then that's a bigger problem, as opposed if you have delinquent income taxes, but it hasn't become a lien where the IRS now is going and put that information um, uh, and you know what I mean,
In public record, right?
public record. Because have I seen it? Yes. And the thing is, it always comes up, and people trying. In my 25 something years, I've discovered that sometimes people, they think if I don't talk about it, oh, maybe it goes away.
Right,
And I go, not if you owe money to the IRS.
right.
It's going to pop right as soon as the title search is done. If you have a tax lien, and the thing is, will literally stop you from buying a home, because a tax lien supersedes any other lien.
Right.
So if you're going to get a mortgage, the lender wants to make sure that, wait a minute, if anything happens, because in lending, everything is about what is the risk? What is the worst case scenario? The worst case scenario is that you lose the house and now I have to go and collect payments. I have to repossess the house. But who's going to take first position? Well, if you have a tax lien, guess what? The IRS takes, So that is the biggest thing I tell people. If you have a tax lien, then you better get this situated right away. And unless the IRS, and in previous cases, unless you pay off the lien completely, because you could owe income taxes. But once it becomes that lien public record, it's not as easy as some people might think. Because first of all, the IRS got to, in the lending side, the IRS has to provide a documentation saying that the loan has first priority. And what is the IRS going to say? Sure, yeah, the loan has first priority. Me, the IRS is going to take second,
It's interesting that you mentioned that, and it actually pertains to the client that left me a message that
Right.
he has a tax lien and he's trying to buy a house. So you're saying, from a mortgage lending underwriter point of view, if
Yes.
there's already a lien there, that ain't going to happen, because there's an actual public lien on them. And like I said, even though the IRS does not file a lien on your credit report, that kind of stuff,
it does. Exactly.
but it will pop up on the title.
Yes,
showing
it
that
does.
when
Yes,
they're doing that preliminary title, there's
yes.
lien. Now, here's
Absolutely.
something that's interesting, and I'm not sure if you knew this, Anna. I've known about it, but I just pulled it up. That one of the questions is it possible to get rid of the lien without paying for it? And on the IRS side, 100% it is now.
See, then that's when they have to call you, because
and here's the exception. How you be able to do that? The IRS does have an exception. If
Uh-huh.
you owe $25,000 or less,
Oh,
under $25,000 or less, and if you're in a direct debit agreement, that's
okay.
where the IRS is automatically pulling that money out of your bank account to pay off that debt. They will release the actual public lien. So now you can actually, because now it's no longer going to be a public lien,
Right.
now you may be able to, underwriters may be able to, because
Yes.
it's not there anymore, then
Yes.
that's not going to be an issue. But you
Exactly.
have to be in a direct debit agreement. That is not the same as just a regular installment agreement, because
Yeah.
there are installment agreements where you agree with the IRS, you're going to make a monthly payment, and then you're manually going in there, sending them the money, or you're writing them a check on a monthly basis.
Right.
That's a regular installment agreement. A direct
Yeah.
debit means it's automatic. It happens
Yeah.
automatic.
And for the from a mortgage stand, that will be a way better option because it can be paper trail more effectively. See, most of the time, people that have an IRS issue, um, they're the ones that also are going to have a credit issue, a
Right.
FICO issue,
Right.
and those are the individuals that they're going to want to qualify with the least amount possible when it comes to a down payment.
Mhm.
So any of these types of loans, FHA, VA, USDA, Fannie Mae, Freddie Mac, conventional, and even the hard money loans, they want to make sure that if there's when we're talking specifically tax lien, is there anything that releases first priority, or is it any documentation that says that the IRS is not in first position?
Gotcha.
Because that's the most important thing that the lenders care is who is first.
Right.
You know what I mean? And of course, if they're garnishing your wages, well, it looks better because at least you had shown some sort of effort to pay this. I mean, yeah, they're garnishing your wages, but but at least they're doing that. So that's awesome because then yes, that would help you. Now,
But however, here's where
yes.
here's another comment. We're just talking IRS. We both live
Mhm.
in California. Here's another challenge, guys, is
Oh
that
gosh.
the franchise tax board, if they place a lien,
Oh gosh.
the franchise tax board does not have this rule.
Yeah.
If you're an installment agreement, direct debit installment agreement, once that lien is on your credit, uh,
Yes.
the state of California will keep it there until the tax is actually paid off.
Yeah. And that's it. And there's no, yeah.
There's no workaround.
No, no,
Believe it
no.
or not, I can actually say the IRS has a nicer policy towards this. That hey, remember, with as long as you're on a direct debit installment agreement, you
Yes.
made 3 payments automatically through that direct debit. Then
Yes.
it's not an automatic release. You have to go to someone like myself to actually
Yes.
get the IRS to release that lien off your account. So,
Exactly. No, I'm glad you say that because let's say you're in the middle of trying to buy a home. And I mean, I don't know how the process is, but you have 30 days from the beginning of an escrow till the end to close this loan. So if somebody has a tax lien and they haven't done this, they haven't gone to somebody like you to get this situated before, which is what I tell people. If you owe money to the IRS, get it done before, because the IRS does not work in our time frame.
Nope.
They work on when I'll get it done when I get it done. Right. So imagine you are in the middle of an escrow. I've seen this happen where I had one scenario where this particular client didn't mention anything. He didn't. It wasn't showing in the credit. He didn't mention anything that he owed. They had a tax lien, and boom, it pops in the title, right? Because when they're doing their preliminary title report, and it was a quite big amount. He wanted to set up some sort of a garnishment and payment arrangement, but guess what? Time is of the essence. This is, and the worst part is if you don't disclose it, now you're you lied in your applications. You essentially are hiding this information, and that just makes things worse. It makes things worse for everybody in the transaction, but also, it could cause for you not to lose your initial deposit, when you buy a home. I mean, there's
Oh,
so many
wow.
things.
I didn't even think of that because
Well, think about it. You lied. You lied knowing that you owe this money and you thought it wasn't going to pop. So now a seller can go back and say, guess what? You neglected to mention this information. And then, of course, now you have to go back to the drawing, to the drawing board and try to figure it out. Can we borrow more time? And how much time do you need? That's the thing. So,
right.
I'm 1,000% agree with you. Handle this way before it gets to that point.
Well,
And
and it's interesting you bring that up because obviously we're just talking tax lien. That's just a
yes,
tax lien.
yeah,
But there's also something else. Obviously, if what Anna's saying is, bottom line, it's possible to get a loan.
yes,
If you got tax problems.
yes,
And when I say tax problem, what's a tax problem? You owe money to the IRS.
yes,
You could still buy a house if you owe money
absolutely,
to
yes,
the IRS.
yes,
Because other than the tax lien, which could stop it completely, having a tax debt is just like having any other debt. They're
yes,
going to be looking at like your debt to income ratio. Can you
yes, exactly. We just added.
explain how that works? How does that work?
Well, the number one thing you got to do is you better have that tax obligation agreement, installment agreement with the IRS, right? And whatever amount they say you're supposed to pay every month, that's going to be counted in your debt to income ratio because it is a debt at the end of the day. Now, depending on the loan that you want to qualify, let's say if I want to qualify for the first-time home buyer loan, the FHA loan, right? Because that's the most popular one and the most lenient one when it comes to debt to income ratio, aside from VA. VA is another awesome program. But let's say FHA, if this is a civilian loan and you want to go with the FHA because the first-time home buyer program and they're more lenient when it comes to the credit scores, guess what? FHA wants to see 3 payments done. You need to show that you've been paying this for 3 months. And it's not, I've had people, but what if I make the payments? I make the arrangement really quick and I pay 3 payments.
Three payments in a row. Yeah, no.
No. 3 payments. So you thought you were ready to buy a home. And let's say, FHA is the option you want to go with, the government program, because it's the most lenient one. Guess what? You have to wait 3 months. Other loans such as Fannie Mae or the conventional loans, they might require for you just to make 1 payment, but they have other requirements when it comes to a loan. They require better credit scores. They might require a bigger down payment. So if we talk a truly first-time home buyer loan, right? And like I mentioned before, when we see tax issues, we also see credit score issues. You know what I mean? And I've seen it all the time. Somebody that it owes money to the IRS, the credit goes with it. So we always see that the government program is the best option. Why? Because how the credit looks as well, right?
And when you say government options, you're saying a program like FHA or even a VA loan.
The VA loan is a beautiful loan. I mean, I always say, in my post, nobody beats VA because VA does things that no other loan can do in terms of how much risk they're willing to take. But when it comes to the IRS, same rule. You better have an agreement. You better have an agreement. I better see a couple of payments being made, and they better be made on time. Now, if there's no way they can take their money out of your bank account, is even better. Why? Because paper trailing it. Because it's not just I made the check, right? We have to provide proof of this. We need to show that you made this payment, and the underwriter is going to look, okay, how was it made? Check? I need copies of the check. Was it a direct withdrawal from your bank account? Okay, I need the bank statements. So it's awesome. It's way better if you do this way ahead of time. Because
so what you're saying is that if you think you got a tax problem,
or you
kind of know but haven't told nobody, because I tell people, I talk about it all the time. Everybody keeps this a secret from even your spouse. You don't tell nobody. You don't. Yeah, nobody tells nobody they got tax problems, right?
Yes,
But
I get it. Yeah.
you think you have tax problems, if you call, you can call. Obviously, call Anna, talk to her.
Yes.
She's probably going to say, "You better go talk to Carlos before
Yes.
you do anything." But
Exactly what I would say.
but it's possible. And I know you've actually helped out a couple of my clients. You actually
Yes.
referred, excuse me,
Yeah.
you referred a couple clients to me
Yes.
that hadn't filed tax returns in years. So
Yes.
I guess I can ask you this question: if you haven't filed your tax return in years, can you still get a mortgage loan?
Oh my gosh. See, now this is now it goes into a very scary area
Okay.
of mortgage lending, because when a lender, we provide W-2s and pay stubs and so forth, right? The lender runs with a 4506 C. I think it's called C nowadays. They change it. And to verify that whatever you are providing to the lender, the W-2s and the taxes and so forth, is exactly what the IRS has in record. That is done. I mean, it's not like maybe they do it. No, they're going to do it. This is part of the quality control. So if you haven't filed income taxes, and then the lender starts thinking, okay, so what is the ramifications of this? Do you owe money? Are the IRS going to come back and file a lien against you? Is it going to take first position now? Because now you have a lien. So what is that going to happen? You know what I mean? So when you buy a home, just file your income taxes. Just file your income taxes. Now, if you haven't filed 1 year, just, okay. Sometimes we see that if you file, let's say, the 2022 income taxes, the records are not available, through the IRS until you probably know more than this, but it usually takes a while for the IRS to show that. But if you haven't filed 2021, 2020, and so forth and so forth, now it becomes a messy situation.
Right.
Because the lender will ask, okay, well, what's going on? There's no record of you filing nothing. So
it's almost a trust issue, right? So you want us to loan you $300,000, $400,000, $500,000
Yes.
for a house, but you haven't even filed your tax return. And
you haven't shown me that you're fiscally responsible to do this. And yeah, so it's sad because I've seen it so many times where somebody will just, not mention anything, or they think that's not going to come and hunt you, or that people sometimes don't tell me, I forgot to mention that I have an IRS installment agreement, because they think that this is some sort of, secret. And then, you pre-approve this particular client, and all of a sudden comes the bank statement. I'm like, oh, what is this $500 payment? Gets deducted. Guess what? You don't qualify no more because the debt to income ratio is too high. You know what I mean? So I always say, talk to me when it comes to this issue, because what I'm going to do is tell you what you need to do to get approved. And if you cannot get approved, I'm going to say, talk to Carlos. Here's Carlos' phone number. Talk to him, because he'll be able to.
But that's also the power of being a mortgage broker compared to sometimes a mortgage banker on occasion.
Lending guidelines are the lending guidelines. Mortgage broker, well, mortgage brokers, we're not bound by one lender. You
can go to different lenders that have different requirements, lending ratios, and things like that.
Exactly. And but the guidelines there are certain guidelines. The lending guidelines are we all have to follow these guidelines. Okay. The difference with the broker and the banker is the banker probably can only go to their underwriter. I can go to several underwriters and pick their brains, and this bank is too strict on this. Okay, I'm going to go to that one, and so forth and so forth. But there's certain things that there's no leniency, which is taxes.
Oh, that's really good to know. Right.
Yeah, taxes is something that it doesn't matter. This is across the board, because this is a hardcore, core guideline that we cannot ignore. It doesn't matter. Sometimes when it comes to other debt or the FICO requirement, so-and-so is not willing to accept somebody that has a 590. Well, this lender has no problem doing a 590, and so forth and so forth. But when it comes to taxes, that's one that, sorry, I mean, because all these loans at the end of the day, they need to be insured. You know what I mean? And
Right,
an
right.
underwriter is not going to fall on their sword just because you want a home if you cannot follow the guidelines. So the good thing is, can you buy a home? Yes, you can. Um, the bad thing is you cannot ignore um, owing money to the IRS. And
Yeah.
sometimes the best thing is handle that first and then come back and regroup. You know what I mean? But I totally agree when you say, sometimes we forget about it and we think, oh, well, they might not catch it.
So basically, kind of what I hear you saying is very similar to what I tell my clients. A lot of times they'll come in here. I need to take care of my tax stuff because I want to buy a house this next week or next month.
Right.
It's probably not going to happen
Eh,
because it sounds like the lenders want that 3-month minimum payment requirement.
Yeah, on the government program, or at least, and then there's other programs that require you want. But no matter what, you need to have that agreement. You need to have the agreement. You know what I mean? And especially, for example, over here we're in California, where sometimes it's very, we still are in a competitive market. A lot of times, even when you want to make an offer, the seller wants for you to get cross qualified, which
Uh,
means I have to send all your information. We've got to block, social security numbers and so forth. And I need to send it to the listing agent's lender, because the listing agent wants to verify that you as a client really qualify. And so when we send all this information, the cleaner your file is, the better the chances of you winning sometimes that property. Because sometimes you look, there's IRS liens and he's doing this, or there's, the more messier your file is, the scarier the seller gets. You know what I mean?
Gotcha.
and
Right.
and that's, yeah, now we're going into a different arena. But yes, so I'm always going to tell people, handle your, especially tax liens, especially if you owe delinquent, taxes. You gotta handle it ahead, because what if the payment, if you try to do it the last minute, what if that payment is not what you thought it was going to be,
Right. Right.
which is the
So,
worst part.
so bottom line, if you're thinking about or wanting to buy a house, one, make sure your tax returns are filed. If you
Yes,
haven't filed them,
yes, just do
um, if you have a balance, and I tell people all the time, a lot of times
it.
people don't have a tax problem. They think they got a tax problem.
Right.
Sometimes all they got is a filing problem. They just
Yeah,
haven't filed their taxes. And
exactly.
sometimes I just had somebody not too long ago hadn't filed their taxes in like 8 years, and
Oh.
later to find out that they almost had refunds on every single year.
Oh my gosh.
But they hadn't filed. So they didn't file because they were afraid, but not
Right.
realizing they had refunds. And remember, on your refunds, guys, the IRS will only give you refunds on the last 3 years.
Oh
So
my goodness.
2022, 2020. So right now that would be 22, 21, and 20.
Wow.
So anything older than that, you're going to lose some refunds there.
Wow.
So you
That's
want to
good to
file
know.
the returns if you're thinking about buying a house. Again, Anna said it perfectly, right? You want to look financially responsible. And
Yes.
financial responsibility is to file a tax return.
Yes.
You
Yes.
know, you
Yeah,
know,
it is.
file the return first, and then if you happen to owe money, then what are you saying, Anna? Okay,
Yeah.
get into an installment agreement as fast as
Yes.
possible.
Yeah. Do an installment agreement as fast as you can, and then there's no issue. There's just no issue whatsoever. You know,
You're going to you have to take into
we
account.
have to take it in consideration. Have to take it in consideration. And if we see it, the thing is, there's no way you're going to escape it. People that have tried to lie, that, oh, I know, I forgot to tell you about the IRS. Oh, you forgot? Okay, well, there's a payment that comes out of your bank statement every single month. Guess
Right.
what? Now you don't qualify for that. You got
Exactly.
to qualify for less, right?
Right.
So that's why I'm always going to tell people, do those income taxes. And if you owe any money, just make arrangements. That's not going to stop you from buying a home. It's when you decide to ignore it completely, or it becomes a tax lien and the IRS holds you, that's it. If
Right.
this doesn't get paid, because I've had scenarios like that with this, the IRS will say no,
Right.
I didn't know back, you probably, you probably could have done something for this particular person, but a couple of years ago, I want to say about 6 years ago, I had a gentleman that, exactly that happened to him. And the IRS said, no, well, we have to revisit the entire thing. And it might take several months to get an answer.
Right.
So the question is, do you want your house or what? Or what do you want to do?
Right.
And he had to pay the entire thing,
Gotcha.
And he had money. That's what that was the first.
Going back to the lien, I know we're talking a lot about liens because it's the number one issue that prevents people from buying houses, right?
Yes.
So
yes.
we did find out here, again, if it's $25,000 or less, and you're in a direct debit agreement and you've paid that for 3 months, we can actually request the IRS to remove the lien.
Wow,
Now, one of the questions somebody had asked me when I had told them about this, but I owe $30,000. Is the IRS going to remove the lien with the direct debit? Well, no, because the rule is what? $25,000. But here's something a lot of people don't realize. You can actually pay down the debt, pay it down below that $25,000. So, pay $6,000 down. Now your debt's under $25,000. Make the 3 payments. Now we can request the release.
See, that's beautiful. I'm gonna keep that on my little handy dandy notes from Carlos, because
$25,000. Remember that.
$25,000. Yes. Yeah.
Well, and you know what? And a lot of people are going to all of a sudden start calling. I mentioned to you this yesterday, Anna, that the IRS is literally going to send 8 million notices over the next few weeks to people that owe money to the IRS. The IRS has been pretty much quiet the last 3.5 years during COVID. They really haven't made any type of real aggressive collection efforts. But the IRS is officially woken up, guys. And we got a notice here that 5 to 8 million notices will be going out after Memorial Day. So that just happened. And they're sending a nice notice. They're going to release them over the course of a few weeks. They just don't want to be overwhelmed with phone calls. That the piper wants to get paid. So if you owe taxes, or you're one of the 10 million non-filers out there that haven't filed, the IRS is coming. I just wanted to bring Anna on just so, a lot of people, the reason they want to finally deal with their taxes because they want to buy a house. But Anna just discussed a few amazing options that it's possible. And I think that's what you just said. It depends. It's possible to still buy that house. You just got to get a few things in order.
Yes.
Anna, if people want to reach out to you, what's the best way for them to reach you?
Well, you can always find me in social media, but I can provide my email address,
Well, I know this is your website, right? Anna Cervantes?
AnnaCervantes.com or Citrus Heights MTG, Citrus Heights MTG.
Citrus, I'm going to spell this out. Citrus Heights MTG.com.
Yeah. Then everybody can contact me. Heights. Yeah. The E and then the I.
I'll change that. I can change that.
That's okay.
Give me a second here.
Yeah.
I'm trying to learn on the fly. Trying to learn how to spell on the fly.
Yeah.
Citrus Heights MTG. That's it. Citrus Heights
MTG.
And Anna, what's the best phone number to reach you?
951.
I'm going to put this on the screen, guys. 951.
538. 7435.
7435.
Yes.
So write down this phone number for you guys. This is Anna's phone number, 951-538-7435. You're interested in buying a house. If you don't have a tax problem, obviously reach out to her. She helped quite a few of my family members. Helped my son recently with a VA loan. My son and my daughter-in-law down in San Diego. Helped them with their houses. She is part of the family here that I highly trust. We're going to go party in her swimming pool this summer.
Yes.
But
It's
Anna, I just wanted to say thank you so much for, taking the time and sharing your insights on this, because I know it's a very common question. Can I get a house if I have tax problems? And again, she says it depends, and I say it's possible.
yeah.
You got to get your stuff right. Uh,
Yes, exactly. It depends
if
on
you,
us,
if you,
but
if
it
you
is
do
possible.
exactly, if you do have tax problems or unfiled returns, you can reach me at my taxdebtconsultant.com. But with that, Anna, I want to say thank you so much for being here, and looking forward to helping future clients and getting together more often. Take care.
Yes, my friend. Bye bye. Thank you.